Hello, how's everybody doing out there? Um, my name is Brian, and I am going to do a quick little video on naked charting. So don't worry, I'm going to keep my clothes on. So seriously though, naked charting just means no indicators, and I'm doing this on the forex market. So it's a great way to trade the forex market. I mean, frankly, there are a million indicators out there, and a lot of people overcomplicate everything with all these indicators, and then they kind of forget the basics of what they're doing, why they're doing it. And so sometimes taking all the indicators away and just looking at the charts is really, at the end of the day, a great way to trade. So without further ado, let's take a look. So this is real quick. I want to actually show you this that I put together. So this is just my quick little write-up on naked charting and kind of the steps that you want to look at before taking the trade. So number one, you're going to go ahead and start by identifying the support and resistance levels. And I recommend that you start out on the weekly time frame. Support and resistance, tops and bottoms. Your support is your floor. Your resistance is going to be your ceiling, your tops. So you're gonna definitely want to look at the weekly time frames when you first start going ahead and identifying these levels, and then you're going to before you can take a trade. So this is your 4 steps for taking the trade. You're gonna have to wait for price to reach that level, the support and resistance level, and then after it does, you're still not going to take the trade. You need to wait for the confirmation, and it doesn't have to be a price reversal. Literally, price can be going straight up or straight down, and it can be going through a bunch of support and resistance levels. A lot of times I try to pick some tops and bottoms, and I'm looking for more of price to reverse. But again, until I can see a confirmation that the price has actually reversed, I'm not in the trade. And then at this point, after you have confirmed all of these, you still need to go ahead and figure out, okay, what is my entry going to be at? What price am I looking to enter at? Where am I looking to put my stop loss, and where am I looking to put my take profit? Right? This is a very important part. And the reason why is, let's just say your entry to your stop loss is 30 pips, and your entry to your take profit is 90 pips. Okay, then that you're calculating your risk reward. You are risking 30 pips to make 90 pips. Okay, so that would be a 1-to-3 risk reward ratio. With any of these trades, I would recommend at least that. Especially a lot of these trades, depending on what you do, they can take a significant period of time, and you're going to want to make sure that you have an opportunity to make money on this trade. So if you've got anything less than a 1-to-3 risk reward ratio, then I would probably stay away from it. But 1-to-3 and higher is really a great place to be. So let's look at the charts. So what I've got right here is I've actually pulled up Euro JPY, and this is the weekly time frame, the daily time frame, the 4-hour, and the hour. So we'll start out on the weekly. Okay, there's a number of different ways to draw these support and resistance lines. Okay, so one way, you can just kind of look at your top. So a lot of times, right, so this top and this top, they're almost identical, right? So you can shoot that right through there, right? You can even make these lines a little thicker as well, which helps to cover a little bit more of an area, or if you want, you can go ahead and actually grab this tool, which looks like 2 lines. And I'm on Trading View, by the way, too. So I definitely recommend, if you're looking to get into the forex market, that you get into Trading View. It's great for looking at the charts. And so here I can go ahead and just bring this right across, and then I can actually bring it up. So it's really, at this point, it's just a preference of what you like. But you can see these tops right here. So I would say this is a good area for your resistance level. And then you can come down, let's see, the next level And I'm just going to shoot some lines to make it a little bit quicker. Right there, that's another good one. This is topped out. It's going through all these and this one. And I try not to draw too many lines, right? You just kind of hit some key areas. A lot of times if you see, let me see if I can, if you see a long wick, let me see if I can zoom in on this. But when you see a long wicks can really be a good key area to look at. And when you see that, that's definitely something to look at. What else, you know, if that matches up with anything else. So I can see that, you know, right here, that's very close. This bottom is close with this top and that top and this bottom. So this looks like a pretty strong area. It actually looks like it has a lot going through it. So right there, that looks like a pretty good one. Okay, so I've got my my main support resistance lines drawn. If I wanted to go one below, I would probably look at right around here. Looks like you have some tops and bottoms as well. So bottom, and then all these tops right here. So here's another thing real quick too. If you're trying to go ahead and see, you know, your distance between them, you can just grab this tool right over here. Just looks like a little ruler. And I would always click the bottom of the top and the top of the bottom, right? When you're looking at your distance, because you'd rather, you know, estimate less than greater, just to be conservative when you're measuring your risk to reward ratio. So this is literally, we're on the weekly chart, just that is 1,000 pips. So I would basically say every one of these is pretty close to 1,000 pips. So a lot of pips can be made on these moves. And then you can go ahead and I can go from the weekly to the daily and take a look at this as well. So you can see how, you know, price was in a downtrend and how it hit these areas and came down, came back up, touched it again, broke through, but came back and touched it again, then shot down, came back up and retouched it. So it's called a pass and check. It's passing it and it's checking it before it goes back down again, right? And so you can see how strong these levels really are. And, you know, so we just missed this opportunity here. And, you know, it looks like it has not came back a second time. Looks like it's coming up to the top. It may come back down and check it one more time. You know, doesn't matter. Whatever it does, it's going to do. We don't really have to predict it. We're just waiting for it to hit one of these levels and then see what happens afterwards. So it looks like these are pretty good levels here. Now you'll see it a little bit more spaced out when we look at the 4-hour chart, right? Because basically all we're doing is just blowing up the charts. So again, this definitely looks like it was in a downtrend, and it hit this area and did a big reversal, right? So it's headed up. So we're going to be waiting for it to hit this area up here at the top, unless it comes back down here. So one other thing I wanted to show then is, you know, let's say that you know, price is you know, right, has hit this area and the rest of this has not happened yet. We can't see this. So it's hit our area, but we're waiting for price to reverse. Okay. Well, then what you can do at that point, if you're waiting for a confirmation, one way that you can look for confirmations is then come back down to the hourly chart. And you can see that was the point where it, you know, pretty much got very close to hitting our support level, and then it turned around. And so what we can see here is this is called Rankos. So typically I use the Japanese candlesticks, but you know, for a confirmation, the Rankos are pretty helpful candles, because what you'll notice here is when it's going down, they're pretty much all red. When they're going up, it's all green. There's not a lot of confusion going on in there. And so what you can do at that point is I'm not constantly looking all over here. Okay, it's red, it's green, make a trade. I'm going to wait till it hits that area. But once it hits that area, then I can go ahead and I can switch over to the Renko candles, and I can see that, okay, look, it was all red here, and now I've got 2 greens. Okay, that's it. 2 greens, get in the trade. Now, of course, I can see right here, 2 greens, I get in the trade. It was red for 1 candle, but then after that, straight green, all the way green, all the way up. And then at that point, you can decide where you want your take profit to be. Are you going to wait all the way till it gets to the green level, or are you going to, you know, just go for a 1 to 3, 1 to 4, 1 to 5 risk reward ratio as well? You know, because this is your, you know, main support level. You know, you really don't need a huge stop loss. You just need to place your stop loss somewhere under here. So you can look at, you know, once it comes down and you get into this trade, you know, if it goes past that green area, past your support level, get out of the trade, you know. And here is where your entry would be. Let me see if I can blow this up for you a little bit. And so 1, 2, 3. So you're in the trade right here. And I will go ahead and snap that. We'll just call that white. Okay. So you can see that if you're getting into the trade here and you're putting your stop loss here, that's going to be, you can go ahead and just pull out the measuring device, and you can see that's going to be about a 86 pip stop. Okay. So then you're going to want, if for a 1 to 3 risk reward ratio, you're going to want to be at least 3 times that. So you're going to want to be at least, hold on, you're going to want it to be 240 or above, roughly. So let's see, right around there. So you can see that, I'll go ahead and put that in and another color. Let's call it green because it's payday. Okay. So you can see that, you know, with these trades, if you do them properly, you can hit a 1 to 3 risk reward ratio or well beyond that if you're getting in the right areas. Okay, if you're waiting for it, and that really is, you know, all about patience. So again, I'll just pull that up one more time. So draw your support and resistance on the weekly time frame. You can go ahead and you can check it on the daily 4-hour as well. And then maybe look to drop down to your hourly for your entry. But you need to wait for the price to reach that area, and then wait for a confirmation. So the Renko candles is only one. There are a number of different ways and techniques you can look to have a confirmation that, you know, price has turned around and is going the other way. At that point, make sure before you get in that you are evaluating your entry, your stop loss, and your take profit, so you have at least a 1 to 3 risk reward ratio or better. So that is it. That's my quick little video on naked trading for the forex market. I hope you enjoyed it, and have a great day, everyone. Take care.